Hello and welcome to Switzer Super TV. I'm Peter Switzer. Thanks for joining us. This is my colleague Paul Rickard. Hi Paul.
Hello Peter.
So the month of August was reporting season and it dominated, didn't it?
Look, it did very much, Peter. Those companies that have a balance date of 30th of June or the 31st of December provided their half-year or yearly results, and notwithstanding those results, the market almost finished at close to a high.
Well, the index was down 0.12%, but if you add in the dividends, 0.62%.
Yes, and on a year-to-date basis, the index, or the S&P ASX 200, is up 5.11%, and with dividends 8.25%. So, you really can't sneeze at those sort of returns.
No. So what is your overall take on how the market performed over the reporting season?
Look, it didn't report too badly. I think the key theme that came out of the reporting season, Peter, was very much about the outlook statement. It was all about what companies had to say going forward, not so much what had happened in the past. To demonstrate that was BHP, which came out with an okay report, but its outlook statement was a little subdued, and also it announced a couple of other initiatives, and as a result lost about 5% during the month. On the other hand, its competitor Rio was quite optimistic, and its shares went up during the month.
Yeah, the industrials kind of did better, but it just looks like a grind to me, Paul.
Look, it's very much still a grind out there, Peter, and if you look at the screen in front of you, you can see the different sectors that make up the S&P ASX 200. Their relative sector weight and their change in both the month of August and on a year-to-date basis. So financials, the largest sector that make up 39.1% of the index, they are up 0.7% and 9.6% year-to-date. The really interesting one, Peter, was healthcare, which really came back to life with an increase of 6.6%, up now 9.2% year-to-date.
It's been a great year. And the success is clearly linked to Ramsay and CSL.
Yes, CSL was up over 9% of the month, and Ramsay just continues to perform year after year.
What about financials?
Look, still powering ahead. I mean, still outperforming the index despite all the naysayers that say that the run of the major banks is over. I don't think it is. I think it's really a case of the dividends are so attractive to small shareholders, there's really no reason yet really to sell the banks.
No. Also, there is a strong theme of the increased dividends, Paul.
I think directors are very focused about how they reward shareholders. In fact, if we look at the results, 65% of companies this year are able to increase their dividend compared to 60% at the same time last year. So that really shows you just how important these sort of returns are in the mind of directors now.
And on screen there, you've got Telstra, the big miners and the big banks, and they're the forecast dividends. They look pretty impressive, don't they?
Overall, about 4 to 5% increase forecast for next year. So with that information, Peter, how are you playing the market going forward?
Yeah, I'm sticking to dividend stocks. I can see a small gain dividend-wise added to a pretty reasonable increase in the market, and I'm looking for stocks that will be sensitive to a lower dollar.
I think that's perhaps where I would take a slightly stronger position. I think you've got a position now for a lower AUD at some stage, so the sectors that could benefit from that include things like healthcare, industrials and potentially consumer discretionary. I also think property trusts, which are up over 20% this year, probably had their run, so I'm going to de-weight and actually go neutral, or sorry, below index weight on property trusts.
Yeah, totally agree. That's Switzer Super TV for this week. Once again, thanks for joining us.